This is back roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. I am Cesar Delgado. This planting season is approaching in the Midwest like in next month. We are watching the grains markets for right now with This Week with Jonh Heinburg from Total Farm Marketing. John is talking about the fundamentals with these world events. This is back roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. This planting season is approaching in the Midwest like in next month. We are watching the grains markets for right now with This Week with Jonh Heinburg from Total Farm Marketing. Hey, John, how are you for this crazy time?
We're doing okay. A lot of things moving, a lot of moving parts. Obviously, choppy, volatile markets, but good strength overall thanks to crude oil. I think it's provided some opportunities out there. I know guys have moved some things, and hopefully that's the kind of the plan as we keep climbing. You continue to move things incrementally, build that base. Because things settle down in the U.S. Iran situation, crude oil settles down in terms of its price. I think you see things fall apart fairly quickly in the grains. So those are things that we're all just talking about right now, and how to build a plan given this opportunity that's here that really a lot of us didn't think was going to be happening because of supply and soybean demand concerns and things of that nature. So, but yeah, volatile times are here.
For sure. How is the crude oil prices?
Well, a bit of a breakout again today. We're over $80 crude, $5-6 higher. Obviously, the concern regarding the Iran-U.S. Iran war is what happens with the Strait of Hormuz. Are we getting some ships moving through that region? Otherwise, that's 20 to 30% of global oil exports. Excuse me, comes through that strait. And that's what the market's concerned about right now. And realistically, if something were to come together that would allow ships to travel safely through that region, I think then you see the crude oil market correct pretty aggressively. But at least at this time frame, that's not happening. And that's why we're seeing the action that we are. You just saw it yesterday. We just kind of had some whispers of something maybe building that would open up that strait. Crude oil market just didn't go anywhere, and we saw that reaction in the grain markets as well yesterday. But then here we are again, crude rallying higher, wheat rallying higher, pulling corn higher, soybean oil pulling soybeans higher, all tied to that strength in crude oil market.
John, we are watching the grains and tension in the world. How are the fundamentals from the corn markets?
Fundamentally, the biggest thing is still going for us is the demand. Export sales today, 2.2 million metric tons, just under 80 million bushels, well above expectations. Those are things we cannot deny. As we're seeing, corn sales on the books up 31% from last year. And U.S. demand continues to stay very, very friendly and strong. Some of the reason that's built an underlying floor under prices here. Then as you throw the strong demand numbers in the crude move, that's helped led to this rally and the money flow into the corn market. Otherwise, the fundamentals still stay a little bit cautious with the 2.127 billion bushels of carryover. We got USDA report coming next week. We're actually expecting to see carryover go up slightly, maybe some reductions in ethanol grind. So we'll have to see how that all plays out. March report. Again, we've got our baseline numbers in for production now. Now we just start working with the line items. So those are things that are concerning. Obviously, other things that are going to be a big factor in the next 6 to 8 weeks here. Got prospective plannings report at the end of the month. Where are we at with those corn acres? One of the things that has helped the corn market was the USDA outlook form putting corn acres at 94 million. I just think most in the industry, including myself, we're going to be over that number. But you can kind of look, that was the day we kind of put a little bit of a bottom underneath the corn market, and we've been kind of rallying since then. So we'll have to really see how those acre numbers play out as we get closer, because we do put another pile of corn acres out there, which like I said, the intentions, it sounds like, could be that way. That really will weigh on the fundamental picture and just add more supply on supply.
How is the technicals on the beans markets for right now? Still,
Bean,
do we have the meeting in China with these world events over the Middle East?
yeah, the China meeting's still in process. It sounds like it's going to happen. I mean, I know that was some of the concern in the bean market is China's retaliation to this is not buy beans. So, but we'll see. Global trade between U.S. and China is a whole lot bigger than 8 million metric tons of soybeans. So there's some things that could keep that market a little bit supported. Now, realistically, when we look at the soybean market, you asked about the technical picture. On Monday this week, after the big rally from the Sunday night trade due to the war, we put a bearish reversal in on the charts. And actually followed that up with another rejection of highs on Tuesday. We've been trading within that window now since Monday's close. So we're in a consolidation pattern, well supported by what we call the 10-day moving average underneath us. That's on that May contract today that finished at that's holding around 1064, 65 area. And then you've got the high over top, which on that May contract, from Monday was 1080, 1185, excuse me. And that's a moving average at 1164. Sorry, it's been a long day. So anyway, with that, we're just been trading within that range now this entire week. We'll see which way it wants to break. Fundamentally, markets are heavy. We're about $1.30 above Brazil, $1.50 above Argentina for the next couple of months. I could see this market break pretty quickly, but again, when you got bean oil up 220 on the day, strong crude oil, that just keeps supporting this market. That maybe we grind here, and next thing you know, boom, we get a pop out to the upside, just based off of that money flow that's in the bean market. So technically, right now, we're still well supported. Fundamentally, a little bit cautious yet, just because of the South American supplies that are out there and the price difference between that and the United States.
Yeah, especially if the biofuels blend is passing in Washington, D.C.
Yeah, I think a majority of that's probably already figured into the marketplace as long as it's not something out of the expectations now. But that has been a supporting factor, has been this bean oil market. And you can't deny the strength that we've seen in bean oil and the money flow into bean oil because of the prospects of the biofuels mandates. And, again, here we are today, gap higher, new high on that soybean oil chart. So we continue to see good strength. I mean, we're looking at a rally that started back in January, just above the 48 cents per pound level, and now we're pushing 65, over 65 today on that March contract, May contract. So again, we're looking at just a really strong soybean oil market. And again, if the crushers are making money, which crush margins are looking good right now, even though soybean meal is not really in the party here. But the crushers are making money. They're going to continue to buy beans, and that's something we've definitely seen support this market.
How was your travels for this winter? Does farmers feel like to be talking to put a call to the corn markets?
As we've been on the road here for most of January and February, did a handful of meetings and things of that nature out there. Just obviously the biggest concern was, where do we get some break in prices so I can get some more sales in that regard? There's still a lot of corn being held, at least that's my impression. Seems like every day I get a phone call from somebody or multiple people saying, should I be moving some old crop corn? What am I doing here? In that regard, maybe more than looking at call strategies over top because of where we are in the price side of it. So that's one of the biggest thing is that it still sense the amount of corn that's got to move around. I think that does become a little bit of a natural burden over top the market in terms of trying to get the sustained rallies. Is just that natural seller, the farmer, the producer with bushels as well as production for 27 or 26 out there that kind of keeps some selling pressure in. Hey, that's a little bit different in beans. A lot of guys move beans early because we're pretty doom and gloomy in the bean market. China wasn't buying things of that nature. So I think we saw a lot of beans move early. So maybe that natural seller is missing in the soybean market, at least to the extent that the corn market does have that seller in there with those stored bushels. We'll find out a little bit more at the end of the month, though, when the grain stocks report comes out. In other words, what actually, at least as of March 1st, is on farm or in producers' hands in terms of soybeans and corn.
What are you watching about geopolitical on the wheat markets, John?
The political side of the wheat markets, that one's pretty interesting. There is a correlation if you look at some of the chart work when crude rallies, wheat rallies, whether it's just a global price concern, thing of that nature that's causing it. We've seen some really good money flow into that wheat market. It's a nice recovery day today after a couple difficult days, still finishing 16 higher. So questions on the geopolitical side, again, Persian Gulf, that region, big wheat buyers, that always kind of comes into play. Some of the wheat flows through that region also are a concern on the export side. So those things that are out there, I truly think the wheat market is going to be a little bit more tied to the weather and where we are in terms of U.S. weather here for the KC wheat belt. I think that was a factor helping wheat today, as some of the rains are going to stay a little more easterly in that region, and as well as what's going on with crude and the strength in that market and the money flow that it triggers into the grain space.
Yes. What is the cash cattle side in the north?
Cash cattle last week, the north is kind of difficult right now because we haven't seen a lot of established trade, but we did see softer cattle trade throughout the region last week, and that was some of the reason that kind of pushed this market lower. Really just felt like a nice correction, and now maybe we're rebuilding ourselves here, so we'll have to see. Cash trade, I got 375 bids slightly today. It's in Nebraska. But again, most business is still delayed. I think producers are holding out for something a little bit higher here in this time window. The biggest thing on that cash trade that it's caught my eye has been the strong jump in retail prices. You know, a couple of weeks ago, we're talking 365 for a choice carcass. Now we're pushing we're well into the 380s, $20 higher than where we were just a couple of weeks ago. That should help out those packer margins. Just from talking to northern producers, I said cash trade's been just kind of choppy and not real aggressive. So there's some feeling out there that they're going to probably have to come to the market here and get some cattle locked in. Still in the tone that maybe we got through a little bit of a seasonal bump, but this cash market's going to be what can drive this futures market higher in the cattle markets in general.
How is the fundamentals trends in the feeder markets for this week?
This week we've seen some softness on that index this week in terms of the cash market, but it still remains relatively strong. We're still at a premium over the feeder board, so that's one of the things that may keep some floor underneath this market. Just again, talking to producers out there, sale barn prices are still very, very high, and competition is still very, very aggressive for them to lock in feeder cattle. So right now, feeder cattle markets, we're just still reflecting tight cattle numbers, tight cow herd numbers that we haven't seen for years, and that's going to be something that's not going to go away as we move into the spring and summer months.
How about the lean hogs market really quick?
Yeah, quickly, hog markets had a nice run, a little bit of profit taking today, so disappointing trade today. But you got cash index, direct cash market trading close, in the low 90s. That's kind of helping out a little bit here. And then at the same time, retail values are pushing that $100 mark. Good strength in those summer hogs. We got back up into the low 110 area. Maybe just a window here. We're getting a little rich, and we could see some pause, especially going into the weekend. But at least right now, the fundamentals are supporting that hog market.
What is your final thoughts about this corn markets after the week?
Well, biggest thing is, as I kind of talk with guys today, is to make sure we're looking at protecting some of those gains somehow. Are we adding some puts in? Are we making some incremental sales? Things along those lines. And that's some of the things I'm really focusing on as I'm talking to my producers here, is just the fact that we've had a nice rally. It can go away quickly, but at least right now, as things want to slide higher, let's make sure we're at least addressing it and somehow locking in and protecting value that we didn't think was coming just a matter of months ago.
Thanks, John. I enjoyed our conversation.
Thank you, Caesar. It was good talking to you again. It's been a couple weeks.
This is Jonh Heinburg from Total Farm Marketing, One Back Roads of Illinois.